Welcome back. Really quickly, I want to dive into this story here, reported from payments.com. It'll be one of the websites I'm going to mention at the end of this in the list of 20. But altcoin use growing as part of corporate strategies. Let me make you aware of this. So, according to a report from Seeking Alpha, companies are investing in high profile altcoins such as Ethereum and Solana for diversification. Bit Digital recently completed its transition to an Ether treasury strategy, having accumulated more than 100,000 ETH, worth $300 million at the current price of 3,000. They believe Ethereum has the ability to rewrite the entire financial system, while ICP will self write it. Anyway, furthermore, DeFi Development Corporation, which is listed on Robinhood, they're a public company that has been acquiring Solana in mass. They recently announced a convertible debt instrument that they will be using to acquire Solana. And then we have Bitmine Immersion Technologies recently announced 250 million in private placement again for Ethereum. Now, outside of Solana and Ethereum, guys, we also know this is beginning to happen in some of the altcoins that we are very familiar with. Recently, last month, Trident Digital looks to they announced, excuse me, that they will create an XRP treasury up to $500 million. The reserve will be funded through stock issuance and other financial instruments. And recently, more recently than this, Vivo Power with the Flare network, I believe that was 200 million for institutional yield reserves, things like that. So if we go back over to the article from Payments, Leah Wald, CEO of Solana Strategies, kind of solidifies the reasoning behind the strategy by saying the move to altcoins isn't about abandoning Bitcoin. It's about diversification and positioning for the next era of on-chain utility and providing an alpha exposure vehicle for investors' portfolios. So the next era of this market is utility driven. And we know this because the players in the space, the language is changing now. They aren't talking about crypto. They're talking about blockchain. They're talking about DLT. They're talking about Bitcoin as a store of value, as a financial instrument that can be used globally, a critical macro asset and a store of value. We want to see this because when you really look at it, these financial instruments, these yield bearing opportunities, stable coins even that are making their way to Bitcoin, this is utility. This is the utility era for Bitcoin. It is surely inspired. Let's give credit where it's due. It's surely inspired by the work that our DLTs and blockchain assets, the ones we have covered over the years, definitely inspired the wave of utility on Bitcoin. There's no arguing that. But what's more important is that the legacy companies that were pushing back against us for so many years, they can't get onto a network fast enough now. And especially with rules of the road now concrete. So I wanted to share this story just to make you aware of the changes in the market. A couple years back, we saw a lot of this taking place on Bitcoin. Strategy, several other companies, Bitcoin mining companies coming in mass and buying boatloads of BTC and storing it in their treasuries. The companies that did this prior to 2023 are gold right now. They have made so much money because remember in 2023, Bitcoin had got back down to about 40-ish, 50,000, maybe even a little bit lower. 27. Yeah, it was at 27,000 in 2023, October of 2023. Bitcoin's price was 27,000. Imagine how much money all those companies made, folks. Also look at it as a way for you to manage your portfolio. Take note of the strategy that these companies are using when they set up these treasuries and how they weight each altcoin in the treasury against Bitcoin. It's an excellent strategy.